My name is Nick B, and let's get into this week's futures overview. As always, starting with the Forex Factory Economic Calendar, let's take a look at what we have for the week. Monday, Empire State Manufacturing Index at 8:30. That's orange label. Here I'm going to focus more on the red label. Tuesday, we have core retail sales at 8:30 a.m. EST. Wednesday, we have FOMC 2 p.m. Rate cut time 25 basis points or 50 basis points. Take your pick. What else? Thursday, we have unemployment claims at 8:30 a.m. Friday, we have FOMC member Harker speaks, but I doubt that's going to change anything. The big event is going to be Wednesday. Are they going to cut 25 or are we going to cut 50? And that's going to also heavily influence price action here. Now, market opens in a minute about. So this blue level here that I have up on NQ and on ES are exactly the levels of where we're about to open up at, which is wild, 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 wild. Because when we look at this on the daily, and we'll start with ES, this is still bullish. Still bullish, right? We had a bit of a correction where we were making lower lows, lower high, lower low, lower high, lower low, and then we started to come out of here. We broke above lower high number one. We tried to break above lower high number two, try to sustain it, couldn't do it, but we always like to focus on the current price action. And with that said, what happened here when we had this pullback down here was a higher high and a higher low. So now that we had this rollover here and we're above not only the second lower high from the downside, but we are also above the higher high. So long as 5670 holds us as support, we have probability to head up towards 5700, 5720, 5740, 5750 is going to be your middle ground. If ES can manage to get above 5750, you will see 5760, 80, up to 5800. 5800 can become a very reasonable target now. In terms of downside, well, if this higher high, this support here cannot hold a 5670, the first thing I'm going to look at in terms of support is where is my 20-day EMA? And that is over at 5560. Perfect. And I'll show you why. We'll break this down to the 4-hour. And if I zoom in a bit, you can see here on the 4-hour when we were making these higher highs on the daily and we broke below them, making a lower low, lower high. 55.65 was the lower high. Okay. Lower low, lower high. The second lower high was at 55.30. Low. The low was at 53.90. We got back to 5,500. We made a higher low of 54.50 more or less, and so long as price held above those two floors, it was a higher high and a higher low. We got above lower high number one. We got above lower high number two. CPI helped us use that as the breakout, which confirmed to us a short-term trend reversal. When you get a break out of the second lower high from a pullback, from a decline, usually it confirms the trend reversal. So long as we can hold a CPI breakout here and these lower highs of 55.65, we are probably going to continue heading higher. We're already getting a bit of a boost, 56.89, 56.90. Nice, very nice. So let's see if overnight gets us to 5700. Let's see if overnight into Monday's open can get us above 5720. If so, tomorrow is going to be a bit of a green day. Now, again, let's talk about downside possibilities really quick. If the support of 5670 cannot hold us, well, we'll start to retrace, I would say, price in points of 20 increments. So 5650, 5630. Really, what I'll be looking for is 5600. Psychologically, it is and would be the baseline of can we continue holding up or are we going to go lower? Below 5600, that's going to bring us down towards 5565, which was that breakout level of CPI. Below 5565, I'll go a step further, we'll probably come down to 5540, get us below 5540, very possible we drop down to 5500. 5500 breaks, well, we're going to be exposed back down to 5450. Below 5450, Again, same thing. We're just retracing what the previous higher lows were, and the lows we're going to be exposed to 5400. Now, if 5400 breaks, now we're focusing on the previous higher lows we were making to the upside, and that's going to be 5370, 5350, 5320, and then 5300 is good night, Irene. And why am I going so much into detail on both downside and upside possibility? Is because it really is 50-50. And something I wanted to go over on today's overview, is what I've noticed with the volume. Now, every time we've been getting some selling pressure into the market, the volume has been a bit spiked up. So let me see, auto zoom. Let me see if I could get this straight. So when we had this correction coming on down, you could see the correlation with the volume was massively increased. And then when we have this about a 500 point run up, 500, 550 points to the upside, you could see how kind of muted that price action, the volume began to be. And then again, we were hovering over at 56.70 for quite a bit. And when that first big red selling candle came down, that was the initial push in volume that we've seen since it was been lower. Now, every spike in the volume that we had, for example, like this one here at 2.26, we had that selling point down towards 5390, 5400. Something different I noticed is we had a nice push in volume here, and that correlated to the breakout of CPI. So what I'm looking for is when we are getting or going to see an increase in volume or a volume spike, are those orders going to be driving us to the upside, or are those orders going to be driving us to the downside? I think that's going to be one of the keys for this week that will help guide us in direction, because again, there's no way to put it here. It's really 50-50. Last week's overview call out was pretty on point. I got caught blindsided with the contract rollovers. I was expecting to see 19,700 on NQ adamantly, and 5670 ES at the minimum. And lo and behold, here we are into the fresh week. We are quite a ways above them. So that's wonderful. The other question that we might be posed to ask is, are these gap fills going to fill? Maybe. It's contract rollovers. Not always. Maybe not right away. Maybe right away. And again, that also is going to be hung up on what is going to be the rate cut decision, 25 basis points or 50. Whatever it is, we'll be ready. We have our levels for the breakout. We have our levels for a breakdown. The most important part about this market is not to forget that this is still September. The motions I was going through towards the downside the first week of September, and then the motions I was going through to the upside last week, are no different from each other. So what leaves me to ask myself now is, what changed? And I honestly can't tell you much has changed yet. Not yet. It's all going to be hung up on this rate cut decision. Once we have that out of the way, maybe we'll make it out of September. Another big thing, a catalyst that kind of circles around the market right now, is that it is a presidential election year. And usually, well, statistically, in presidential election years into September, sometimes you do see a push to the upside in equities, sometimes not. I'm going to tread lightly on that, because again, until I see what the rate cut decision is and what price action is showing me, I'm really not going to force my hand here just yet. Really is 50-50. Again, we have quite a few things to watch out for. So let me move on to NQ. NQ, let's see. So the blue line again, 19,740 was where we opened up above. I'm going to keep this up for now. And starting with the daily, is this bullish? Yes, absolutely. This is still bullish. Right. What we did last week, well, not last week, but what we solidified really was we made a new higher high and a new higher low. So long as this trend line, this primary trend line now holds, price technically is bullish. So what are we left with? Well, similar to ES, as long as we can hold our breakouts of the previous lower highs of 19,700, I'd say we have room to retrace up to 19,800, 19,900 until the breakout of 20,030. Now, the breakout of 20,030 is a really good throwback for us, because A few weeks ago, we were talking about the target of the second lower high from this correction. And the second lower high from this correction that we've had just so happens to line up at 20,100. I say that the moment we get above 20,030, we are going to see a push towards 20,100. 20,100 breaks, you kind of have to go long. You have no choice but to go long because you have no real resistance really until 20,170 to 20,200. Once you can get a break out of 20,200, it's over. The worst of it really will be in by then because you're now going to start seeing maybe 1-2% days of 250 points gained. NQ, you've seen this, guys, can maybe in one day even have no problem above 20,200 coming up to 20,005. Above 20,005, we're looking at the lower highs of 20,600. Above 20,600, we're looking at 20,700, 20,800, and then all the way up towards really 21,000, which will be our next breakout. And the target for NQ, what I like to do on breakouts, especially in all-time highs, when and if we get to that new area, is target points of 250 point increments. So it'd be perfect to above 21,000 target 21,250, 21,500. But again, that's far out talk. Let's also not forget that if we get a pullback or retrace back to 19,700 and we break below it, we have quite a ways to go to the downside too. Our daily 20-day EMA is at 19,250. So long as price can remain, maybe this week, next week, maybe October, so long as price can remain above the 20-day EMA, we should be supported to see more upside. Maybe pullbacks here and there, but you buy the dip, you buy those pullbacks, and you keep going higher. Now, if into this week, for whatever reason, maybe the market has a fit over FOMC rate cut decision. If we end up below 19,000, I would say 19,200. If we end up below 19,200 again, we're in for a trip to the downside again. And again, this is just the September motions. Below 19,200, that would be our CPI breakout. That would also be our second lower highs from the downside. Well, yes, I would count these as my lower highs. 18,950, and then your second lower high is 19,150. So 19,200, 19,150. Break below that, you're going to be exposed all the way down to 19,000, 18,700 is really what I'm aiming for. If 19,000 decides to break, and before 19,000, 19,200, it's possible. It's very possible. And something again that we'll need to I'll need to focus more my attention on is, where is volume? Are we getting a spike in volume? And if we are these orders being driven to the downside, or are they driven to the upside? Again, if I see a spike in volume and these orders are heading higher, well, guess what, guys? The worst of it, I would say here, is in the market. That means would have processed any catalyst in a healthy fashion, and we just resumed the climb towards all-time highs. That would then line up with the statistic of, in election years, September, we do tend to see a little bit of a peak in all-time highs. Sometimes, again, 50-50, guys. It really is going to depend on, the rate cut decision, 25 basis points or 50. 50 would be nice, but, I think the Fed would be kind of catching up to what was already overdue since August, really. But 25 is not horrible. The problem with 25, though, I'm thinking, is possibly from this week into the end, possibly into the second week of October. What might end up happening is we end up chopping. We might just end up chopping for that week and 2 weeks to a month. So we'll see what we get in terms of upside downside. Something to keep an eye on also is the VIX. Look at the VIX here. So let me clear this up a bit. Pull it up on the daily. All right, so the VIX, wow, we had a spike up to 23.87, could not sustain, headed back down towards the $20 level, broke below it, broke below last week's lows of 1624, below 1624. We're still hovering at 1656. Let's see what Monday brings to the table. So long as we are ultimately below the $20 level, we have a gap to fill here. I just realized we have a gap to fill to 1557, and then below that, really the gap to fill is at 15. If the VIX ends up at 15, we are going to take our shot at possibly 5700, 5720 on ES, and 20,030 for NQ if the VIX ends up going for this gap fill towards 15. And maybe around that time, maybe maybe we short. Who knows? This is September again. We'll see what we get. We have our levels kind of underlined here. Now it's a matter of time. I'm not going to be touching nothing into Sunday. We'll see how the overnight, how Asia treats this, and pre-market will be fresh and ready for what Monday has in store for us. Maybe low volume gives us a fat grind towards our next lower high, and that's going to be over at 19,850. If we can sustain above 19,700, 19,850 is the target. Above 19,850, you're going to see 19,900. Above 19,900, you will see 20,000. Now, below 19,700, that's a rocky road. I don't like to think, but I say your next support is going to be 19,640, 19,600, below 19,600, 19,500, and then below 19,500. I mean, your baseline, what essentially is holding NQ up here on the intraday, or was, is 19,400. Get a break below 19,400, you will see 19.3, and below 19.3, you will revisit 19.2. We can't be ignorant to the downside so much as the upside. We have to take both of them into account right now. It's very easy to go on and pick sides, but it's difficult at the same time because, we're kind of speculating slash betting on some kind of data that we don't know yet. And I'm just going to let price action do the rest of the work for me. So until we get a solid breakout or a breakdown, I won't be touching this. I would be fruitful. I would be delighted to see more upside. Please, let's revisit my good old friend at 20,000 where I got faked out. If you guys remember, that was nuts. Um, let's revisit that breakout and we could ride that out. If not, okay, so be it. Well, we could short too. I'm okay with that. Took me a little bit to get adjusted to the ups and downs, but I see the game now. I see the game that they're playing, and again, let's see. Monday, Tuesday is going to be a really cool prerequisite to FOMC, and the reason I use the word cool is because either the low volume is going to give us some one of a kind moves, either to the upside or downside, or we might not do anything. And if that's the case, the longer we do nothing, meaning Monday, Tuesday, if we chop until Wednesday because of uncertainty, that move is going to be very aggressive. And we'll see. We'll have a level. We'll have our levels underlined depending on what breaks down, what breaks out. We'll execute from there. Have a solid trading week ahead, and I'll see you guys into next week. Cheers.